But Rajen Shah, after this steep run-up in the stock, if one is completely missed out on a buy on Yes Bank, is it still a good time to buy in from a one-year perspective?
Well, Aisha, I think that the stock has run up a lot, and the same is holds true for the market actually. Significant run-up has been seen in whether it's banking stocks like Yes Bank, IndusInd Bank, or the broader market which has done exceptionally well. So I would refrain from buying at this juncture. No doubt there are a lot of buy reports, a lot of money flowing into domestic mutual funds. FI is also positive on India. Everything seems to be good, but I think the run-up has been quite swift actually. Aisha, I would just like to take credit for what we had forecasted in January. I think on the 18th of January I was on the afternoon show on your channel, and at that point of time the Sensex was around 27,500. We had forecasted that by the end of December it will be 32,000. It's already beyond 32,000, that too in July. So we are 5 months ahead of what our target was. But I think that now, time is ripe for a correction, and I think we could see a good correction because everybody seems to be in a very good mood and joyous mood of owning the shares and trying to catch momentum and fancy. So I think a correction is due, and plus valuations are also not so compelling that you go all out and buy. The valuations were compelling in the month of January. One of the stocks, since you mentioned about ICICI Bank, we had mentioned on your channel was Mahindra and Mahindra Finance, which we have been repeatedly on your channel, talking about buying aggressively. The stock has given 50% return. So now we are also, advising our clients to book profits in stocks which have given 50-60% return. Maybe look out for about 10-15% kind of correction and probably then get in. I think, there are 5 phases in the market. One is extreme pessimism, then there is pessimism, then moderation, optimism, and then over-optimism. We are already crossed the zone of optimism and we are now getting into a zone of over-optimism. Over-optimism can last 5-10%, So who knows, this market can go take us to 34,000, 35,000. But I am not in the camp which would put my money in this kind of market. I am sitting on the sidelines waiting for a correction. And if we do have corrections at regular intervals, we had the February 2016 correction when we got stocks at absolutely stunning levels. We had the correction in November, December 2016 when we again got an opportunity to grab stocks at great valuations. So probably, and this time we haven't seen any significant correction, not even a 5% correction in the market in the move which we saw from December 2016 till now. So I think let's wait for a correction. We'll get an opportunity, if not today, maybe tomorrow, but certainly wait for a correction. There's no hurry to make money, so let's not catch fancy.
Next has reached 32,000. When will it reach 50,000? Let's put it on record. I'm writing the date, and I will give you credit when the index reaches 50,000. 28th of July. I've written it in my diary. 50,000 from Rajen Shah. Tell me the date.
Well, I think that we are talking about 50% upside from here. So I think in about 3 years time frame, 3 to 3.5 years is what I would look forward. I am not expecting stocks to give you 24-30% return now year on year. I am expecting moderate returns, maybe about 13 to 15 to 16% returns, depending upon quality of stock you own. So I think that in about 3.5 years, or maybe a little less than that, we should be able to touch that 50,000 level.
Okay, that's noted. We're still awaiting for Chris Wood's target of on the Sensex. 40,000, I remember, is what he said in the last whole month.
See, if markets have to go to 50,000, they'll not wait for 3 years. If they'll, my sense is that in a bull market where you are in this kind of an, price move, markets will not wait for 3.5 or 4 years. If they will not go to 50,000, or if they will go to 50,000, it's going to happen much before that, because that's how bull markets move. Markets always follow a cycle. We may look back and say, okay, this time it is different, but trust me, there's nothing called it is different. All asset classes, they follow a cycle. All asset classes, they follow a pattern. The sooner we realize it, the better it is. Sandeep, mathematically, based on earnings, we would say earnings will grow at 10%, so market should move in that kind of a trajectory. But it never happens like this. In this kind of a market, if markets have to go touch 50,000, it will happen before.
Yes, see, so I will look at it this way. 2008 peak of 21,000 to 32,000, 50% move has happened in approximately 10 years. Now the next 50% move should happen, I think, within 3 years, I guess, but I won't agree with you in the sense that it will be very rapid. So I think it will still be moderate, contrary to the last bull market where it started from very low level of valuations. So we are not at a very low level of valuations. So my guess is it will take some time, but in 2019 I think we'll see 15,000 Nifty. So you can take it down, take this down.
Okay, another 2 years. Just by the way, the point that Sandeep was making, that it's not been such a rapid move. It has been a labor and the index has taken its own very sweet time. So from the start of 2010 to now 2017, it's been a 92% move that you've seen on the index. That's the Nifty that I'm talking about. 4,819 point appreciation that we have seen. So yeah. It takes a time, but it's going to get there. 2 years, says Sandeep Sabharwal, 3 years, says Rajen Shah. But we've noted both the dates down. Let's move across, get in some intraday trading ideas as well. CK, not the Sensex target of 50,000, but intraday trading ideas from you.
Yeah, let's come down to what will happen today, tomorrow, which is really the pace or the area that we live through as we trade the markets and engage with it. For that, we are looking at whatever has been in action in recent times, and Voltas definitely springs to mind. Manas had a day call in this. I would take that call a little further, say that it could also be a positional play since a nice breakout has happened to the upside. And the spot was at about 516, the futures finished at 506. So I think today you might have a start somewhere in between the two perhaps. But wherever it may be, the breakout is nice and quite encouraging. Therefore, in the price range of about 500 to 506, I would be a buyer in Voltas with a stop loss at about 495, and I would target around 525, 530 across the next several sets of days. So a positional play in Voltas at the current level and on some minor dips.
Okay, that's a positional trade coming in on Voltas from CK. Kunal, what about your ideas?
Aisha, it would be a buy on Apollo Hospital. Largely the stock is still in a big range. I think 1200 to 1180 as a support and closer to 1340, 1350 as a resistance. But if you look at the last 2 weeks of price performance, and the indicator performance, the 50-day moving average has broken the 200-day moving average on the upside, and there's a substantial shift of trend in terms of the long-term and the medium-term moving averages, which indicates that this 1340, 1350 resistance should be tested once again for Apollo Hospital, and a higher probability is that this should be taken out this time around. So if you're a short-term trader, look out for targets of 1340, 1350 on Apollo Hospital, recommending a buy at current levels, stop loss to be kept at 1275.
Manas, what about your stock idea?
It would be Dabur. See, recently we saw a rally from the level of 275 to 305, but for last 2 weeks stock was facing resistance near to 305. Yesterday it broke that resistance with higher volume. So I think the stock has potential to break its all-time high and it can test 322 soon. So here one can take a long call with a stop loss of 307.
Okay.
Right, okay. Let's talk about what's happening in the mid-cap end of the market. We've been just so obsessed with the Nifty and the Sensex levels. But Pranay joins in to tell us what's the mid-cap dhamaka for the day. Pranay.
Well, it is Saga Cements, Aisha, robust set of numbers on all counts. You had a volume growth of about 11%, so 6.6 lakh tons was the output, and that was coupled with a realization increase of about 18% compared to what 11-12% that a couple of analysts were factoring in, which has driven a 30% growth on the top line. Also, because of lower costs and also better efficiency and productivity, coupled with the price increases that they've managed to take in south as well as west, EBITDA per ton has risen a solid 47% year on year, while the absolute EBITDA has jumped up more than 60% on a year-on-year basis in this time, which is reflected in the margin improvement by about 280 basis points. So now they stand at about 14.2%. Naturally, all this benefit has now trickled into the bottom line. So you have an adjusted PAT of 10 crores versus a loss of about 30 lakhs that they had in the corresponding quarter last year. What the management has said is that second half volume growth is expected to be even better because we've had the commissioning of the Toshali unit which led to the strong numbers this time. This will only perform better with higher utilizations going forward. Also the Vizag unit is now ramping up, which will reflect in the second half, and even in this second quarter they managed to take price increases in west and southern key regions. So therefore this, as well as the inroads that they are making in other markets, should prove to be a very strong start to the year, and this is only the trend for the rest of the year going forward as well.
Okay, Pranay, we'll leave it at that. Sagar Cement, Pranay says this is the dhamaka for the day, so look out for the price action on this particular stock. Cement, needless to say, has had some great number reportage of late, be it the smaller ones or even the big ones like an ACC, Ultratech. And Sagar, he feels, is going to be the best of the lot in terms of a stock price move. ITC, that's another stock to look out for. The sales have managed to beat the estimates. The cigarette revenues have jumped quite a fair bit. Although the net income numbers, that they have managed to miss the estimate. But I think the key for ITC is definitely the cigarette volumes, though the litmus test is only going to be in the next quarter because this additional price hike that they've undertaken of about 6 to 7% across their categories has only come about now. So the true effect is only going to be felt in the second quarter reportage. So that's where you can really guesstimate as to what's been the impact of this 5% additional cess that they had to levy in addition to the 28% GST. Sandeep, what do you do with ITC as the stock price and how you read into the numbers?
I think numbers are pretty decent in the context of where the company was operating. So my guess is stock will be an outperformer from here, given the fact that markets shouldn't do much and markets could be correcting somewhat in the near term. So I think ITC is pretty well placed, and I think the price hikes in cigarettes are always absorbed because it's there's not too much of impact of tax hike led price increases on volumes typically in cigarettes. So I think it will be well absorbed, and the results are actually pretty decent. So I would think that ITC should do well.
Rajan, as a house, which is the next big investment idea you've identified? I mean, have you initiated a buy or have you bought anything substantially in last 15-20 days?
Nikunj, we have substantially, been promoting, aggressively been promoting Tata Global Beverage, which has not participated in this run. We have been promoting Tata Power. We are quite positive on the Tata Group, because of the initiatives which the management has started taking. And I think that will spill on to other companies also like Tata Global, Tata Power. Significant reduction in cross holdings, reduction of debt, I think could re-rate these stocks. Tata Global, I've been mentioning for a long time, but the stock has actually underperformed. Is quoting at just one time the sales. If you take out the investment it has in Tata Chemical worth about 700 crores. If you take out the bit of cash it has, it's a debt-free company. And also if you take out the investment of about 1500 shares of Tata Sons which it holds, which we consider the value to be about 1500 crores, you're getting this company for less than one time the sales. The second largest tea company which is deriving 70% of the revenue from branded products is available at less than one time the sales. Whereas if you see Lever, Procter & Gamble, Dabur, Marico, ITC or any global company like Starbucks, Coca-Cola, Pepsi, they are all quoting at anywhere between 4 to 5 to 6 times the sales. So I think there is a significant re-rating possible in Tata Global Beverage. So that is one stock we like. Tata Power is another stock which we believe should do exceptionally well. Reduction in debt would happen over the next 1 year. Secondly, Mundra should turn around in about 2.5 years, or something could happen in Mundra. Probably the management could sell out majority holding to one of the states or the institutions which are buying power from it. So that is another thing. Secondly, it has got very good investment portfolio which also can be unlocked. And Nikunj, the interesting part is that Tata Power who owns 6,673 shares of Tata Sons, plus it has a 100% subsidiary called Aftab Investment which owns another 2,500. So if you take out the value of this holding of Tata Sons, it's 9,000 crore, market cap is 22,000 crore. Something could happen, Tata Sons is cash rich and probably who knows, it can announce a buyback and which could lead to and then reduction of debt and re-rating of the market cap. So Tata Power at 82, Tata Global at about 168 look very promising. We also have identified many ideas in the mid-cap space where the market has run up a lot. Just to give an example, Hindustan Times, HT Media, which is quoting at about 84 rupees. There's sheer value in that stock, but the stock has not participated. In December, the stock was at about, I think, 80 levels. Right now it's at about 84, so it's hardly moved up actually in a market where mid caps have moved up anywhere between 30 to 40 to 50%. The market cap is about less than 2,000 crores. The cash in the balance sheet is 1,200 crores. In 800 crores, you're getting Hindustan Times, Mint, and Hindustan, which is the number 2 paper in UP and number 1 paper in BR and Jharkhand. Besides, the very interesting thing is that the radio business is absolutely, available at throwaway price, because if you see the valuations of Entertainment Network, which owns the radio Mirchi, it's quoting at about 7 times the sales. Music broadcast revenue of about 275 crore, market cap 2000 crore, quoting at 7 times, and here is 158, 160 crore business. You're getting it for free, So basically, HT Media should, I think, easily give you about 100% upside in the next 18 months,
Well, 18 seconds to go. Pre-opened rates are about to kick in. We've closed above 10,000, but we did see a late sell-off, and that could really be attributed to that FNO unwinding. I mean, something like an India Bulls real estate really cracked. What's interesting here is that one of the IBL REIT scheme, or one of the trust scheme, has actually sold off 77 lakh shares. That's what the bulk deal is indicating. Why would they sell at these levels? You would ask yourself a very basic question. 1,020 for Nifty. And if I look at the broader trade orientation, we are not working with very strong or very poor set of global cues. SGX, for some bizarre reason, is not showing the right reflection, but the rates are not getting updated, so don't look at that figure here. But for the moment, the first pre-open rates are just about kicking in. So I'll tell you what, let's wait for the first pre-open rates to settle down, and then we'll talk about it. But before that, let's throw it back to Kunal. And Kunal, yesterday we extensively discussed Bharat Financials.
Yes, Nikunj, and after a long time, the stock has now shown signs of good momentum. Volumes in the last 3 days, I think, post the result which came out for Bharat Finance, I think post that we've seen good volume activity. The stock is now comfortably above the long-term average, 200 moving average as well. And this is the price patterns, the indicators all suggest that this could be it could be possible that the stock may start a fresh uptrend. And looking at the way the stock has underperformed its peers significantly in the last 3 months or 4 months of this strong rally in a lot of these spaces, I believe there could be a higher chance that you might see a catch up as well. The critical support now for Bharat Finance is shifted towards 775. So keeping that as a floor, or that is a support, I think traders could initiate fresh long positions in Bharat Finance.
Okay, that's the take coming in on Bharat Financial. Let's look out for some other names. Pharmaceuticals could be the other one which is in focus. Biocon has come out with a little bit of a disappointing earnings this time around. It's managed to miss the estimates. Also look out for what is going to be the move on Glenmark as well. They too have come out with their numbers. And Sandeep, we've been talking about pharmaceuticals at length as to how sporadically buying has been coming back into the sector. But earnings somehow have not been, managed to catch up. For instance, in the case of a Biocon, the stock though has outperformed year to date. But what do you do now looking at the set of earnings?
Yeah, so I think Biocon keeps on moving on future prospects. But in terms of earnings delivery, even if you see over the last few quarters, it's been very volatile. 1 quarter of good results, 2 quarters of bad results, and current valuations leave no scope of disappointment. So my guess is that the move in Biocon is done unless they come out with any a significant positive trigger, and we could actually see the stock give up some of its gains. And actually the other thing is Dr. Reddy's commentary, if you look at it, I think that's the true reflection of what's happening in the pharma space. US generics is under pressure, volume growth is under pressure, domestic market had some GST concerns, so I think Glenmark reported somehow huge increase in domestic sales, which is tough to understand because there was a destocking cycle which was very clear. So I think pharma is a tough space right now.
Yeah, pharma indeed is a tough space. In fact, talking about some of those numbers, while Glenmark is showing you a big pop, DRL is down 4.5% right now. And I also want to check in on what Biocon is up to, because, like Sandeep rightly mentioned, this is a case of 1 good quarter of earnings, 2 bad ones, 2 good ones and 1 bad one. So it's been very erratic, their earnings reportage. Biocon also should come off your screens, while DRL of course is suffering. Biocon also is down currently in trade. Good numbers from or rather bad numbers, I beg your pardon, from ONGC. The profits have come in at their lowest in over a year because clearly gas prices as well as the currency movements have weighed heavy on ONGC's performance. ONGC down by about 1% in trade. Even for the Nifty, the pre-open rates were suggesting a bit of an uptick. It's now completely fizzled out and it's now lying flat in trade. Sri Renuka, that's the other one which is in focus right now. Sri Renuka also starts off in the green post the Wilmar deal. It's up 2% on Sri Renuka Sugars. 1945 is where the stock is right now in trade. Reliance Capital has also come out with its numbers. IDFC should be reacting to its earnings. Idea, wherein it's a wider than expected loss, even as the sales have managed to top estimates. Idea has sunk and crashed about almost 8% in the pre-open rates itself. So these are a clutch of names which are going to be in focus. But quickly then, the traders radar, and here's what the 18-hour small case greed and fear index is reading. Yesterday it was stuck in the middle at that 50 reading, so the needle was bang in the middle and now slowly tilting towards the fear zone. 44 is the reading on the greed and fear index right now. The cues this morning quiet to weakish when it comes to US and weak when it comes to Asia. Talking about the reversal of this rally, the SGX Nifty, remember, is indicating a very sharp downtick, about 1% or so lower. And there are always skeptics and concern on the markets right now, given the Nifty valuations after that sharp July series rally that one has already seen. Talk about fresh day of the new series. In the August series, the Nifty futures have traded with a premium of 43 points. The rollovers have stood at 67% versus the 3-month average of 70%. And the bank rollovers, Nifty Bank that is, stand at 76%, much higher than the 3-month averages of 68%. So look out for some of these names. We were just talking about DRL, and it's a thumbs down from both Kunal as well as CK on DRL. Maruti, which came out with its earnings during market hours yesterday. The conference call, of course, came in only much later, but it's a thumbs up from both Kunal as well as CK on Maruti. And ICICI Bank, good set of numbers, came in post market hours. It's a bit of a contrary call. Kunal gives a thumbs up and CK is giving it a thumbs down. But on to Ajay to sum up the key 5 stocks that one needs to keep on our radar today. Ajay?
Good morning, Aisha. Well, the numbers from Maruti were a slight miss and some fresh shorts emerged on the back of that, which will run for cover today because big brokerages have upgraded the stock of Maruti as close as 9,200, 9,200 kind of targets have started pouring in. So that could rebound in trade today along with the other result reaction, DRL. Brokerages have slashed the price targets mercilessly on DRL. And this is the worst quarter they've seen in many years, some go on to say, could come under pressure again today. From the mid-cap space, Deccan Gold is one stock to watch out for. Won't be surprised if it hits a circuit because Vedanta Group, the multi-billion-dollar conglomerate, is keen to pick up stake over there. Sagar Cements, in fact, it has been a very good quarter for cement as a pack. Sagar Cement also came out very solid numbers. It's a mid-cap cements play and could be gaining in trade today. And of course, Motilal Oswal, third quarter in a row, very solid numbers, 55% kind of growth rate, profits, top line, everything is very good. The management would be coming out with the commentary today, but the stock could react in trade in today's session.
Right, Ajay, thanks a lot for that. Motilal Oswal PAT has gone up. I mean, the entire AMC business or the asset management business has become so large for Motilal Oswal that the delta or the earnings uptick for Motilal Oswal is actually coming from the AMC business. The institutional business is a decent business, but the spreads there are so thin that's contracting. And Aspire also has picked up, but you know, when it comes to Aspire, they may not be the big one there. I'll quickly check on HDFC with our experts, you know, because when HDFC moves, it's time for us to take notice of it. Kunal, in one line, HDFC for the day, buy, sell or hold?
It should be a buy, Nikunj, and I would probably place a target at 1760, 1755 for the day.
Okay. Manas, HDFC for the day?
For the day, I would like to wait. I think on correction near to 1700, that time definitely one can take a long call with a stop loss of 1660. A target would be around 1800, 1825.
Navneet, in this up move, do you think HDFC Limited can go to 1800?
Well, probably it can. It looks like that the up move it has created that 1690 was a critical hurdle zone. But I was looking at the data of the rolls. The long rolls are basing on both HDFC and HDFC Bank. So just jumping on the fresh long idea at this point of time, I will wait a bit. I believe that there would be some kind of a moderation or correction, and then start again somewhere levels or somewhere near to 1700 levels to get into an HDFC.
So HDFC 1717, it's still a mystery that what's happening in the market in terms of, if I look at the flow patterns are telling me that FIs are not aggressively buying in the cash market, but mega cap stocks and at least the stocks which are dominated by normally foreign investors, they are leading the rally. Okay, now before I move on, and just for the benefit of those who've tuned in case you missed our analysis yesterday, well, the July series which just got concluded yesterday and today we start the August series has been a record-breaking series. Nifty appreciated by nearly 6%, and last time when such a large appreciation happened, it was in the December series, which was a month after the demonetization shocker. So markets were recovering from a shocker, and then there was a post-event adjustment. Similarly, in February 2016, when the world was crying and the world was contracting, there was scare called China, we saw massive comeback in the February 2016 series. So the point I'm trying to make here is that the difference between July 2017 series and previous occasions is that markets were adjusting from an event sell-off. This time there was no event sell-off. Markets have nicely and steadily consolidated, and then mega cap stocks have really taken things forward. And Sandeep, you may want to comment on this pattern. The difference between 6% is not a great gain. I mean, we've seen bigger gains in the history, but historically when we've seen such bigger gains, they have been after an event. They have been largely post-event adjustments. This time it's new, fresh, and looks like fresh set of buyers have come in.
That's true, and 6% is a pretty high level number of increase, because average, if you see long-term average of increase of index on a monthly basis is around 1.4 odd %. So 6% is 4 times of that, so which is pretty healthy. Now the move this month is reflective of the fact that few stocks dominated. So I think if I remember rightly, Reliance dominated, the HDFC twins dominated, and to that extent they themselves would have contributed significantly to the up move, maybe IndusInd and all also. So the large cap led rally is always better because it's more sustainable, and some skepticism in mid caps or small caps always is good for the longer term health. So, but we've seen speculative up moves also, which could get corrected going forward.
Okay, look out and maintain some amount of caution in the market. But Navneet, you've been mapping the FNO activity closely. Do you sense that in the new series as well, it would be Reliance as well as the HDFC twins which would continue to gain traction?
Well, that's what I was talking about. Look at this entire move. What we are seeing is we are seeing the cost of carry on likes of HDFC Bank. They have actually shrunk, and the kind of an open interest position that carried forward to the August series is also significantly down from the historical averages. And so, in the case of HDFC Bank, we normally clock it somewhere near to 2.4, and this time it is 1.7. So it's significantly down, and so I believe that there has been not many long rollovers trade which has happened for this for the series. So mapping up a trade for whether the stocks will continue to gain traction, it would be difficult. But looking at the overall structure, it looked like the stocks might held up, but may not correct a bit, but more than 2.5 to 3%. Looking at the chart breakout that these stocks have seen, but I would be skeptical in terms of going ahead and fresh buy at these levels, the likes of both HDFC twins and Reliance. Looking likely that there would be some kind of a moderation before that we see any further up move.
Okay, let me just quickly recap all the trading ideas coming in today, and then we'll get some top trading and investment strategies as well. CK's got a buy today on Century Textiles with a target of 1190, and Tata Elxsi as well is what he's recommending buying with a target of 1760. Manas Jaiswal, he's got a buy on Suzlon, target 22, a buy on Voltas with a target of 535, and a buy on Dabur with a target of 322. Kunal Bothra recommends buying ACC today with a target of 1840, a sell on Tata Motors DVR with a target of 250. But let's take in the top trading idea. Kunal, very quickly, your top call.
We are buy on ACC, target 1840.
Okay, a buy on ACC. CK, what about your top idea?
Long in Tata LXC at 1735, targeting 1760.
Okay, a long on Tata LXC. Manas, what about your top call?
It would be buy on Suzlon, its stop loss is 19 rupees, target is 22 rupees.
Buy on Suzlon then. Okay, those are the top ideas coming in this morning.
1 minute to go, and again, we've put behind a very historic series. I mean, variety of, again, a whole, host of landmarks were conquered or they were reached at least in the July series. Nifty touched 10K, closed above 10K. 6% is what we've appreciated for the July series. The best, I think, for this calendar year. In terms of market capitalization, the mega cap stocks, they really led the market, uptake. We had a grand listing called AU Financial. So we've put behind very strong, encouraging and powerful days of trade. But where do we go from here? Because now the last lap of earnings season will start, where PSU, banks, cyclicals and some industrial companies will come out with numbers, and let me assure you, they will not surprise you with earnings like the way HDFC Bank, or for that matter, Reliance has surprised us. So that in a sense could be a pushback factor for the bulls. Somewhere the entire short covering which was there in the system, which and especially which came by the ODI route, and then after the new SEBI law which had to be taken down in a compulsive manner, that short covering effect is also behind us. So today we start with a clean slate. If you're a Nifty trader, it's time to take a fresh view rather than getting influenced by what's happened in the month of July. So it's already 46 points off for the Nifty. This is coming despite the fact that we did not have a very poor hangover from US markets last night. 46 points off for the Nifty, and the first rates on the Sensex also are not reflecting anything which could be called as very favorable for the bulls. So our tickers are also struggling to move immediately into red, because our tickers are also accustomed to starting with a lot of green. Okay, let's start addressing newsmakers here, and first it has to be ICICI Bank and then ITC. We'll get down to the other smaller ones later, but sub 300 rupees for ICICI Bank, and for ITC, Dr. Reddy, they were I wouldn't say scary, but they have a poor set of numbers. Another 5% off for Dr. Reddy, and ITC 3.5 rupees up for ITC. Bharat Financials, the star yesterday, and then India Bull Real Estate, it reversed, and it reversed very sharply. And I think for India Bull Real Estate, that sharp reversal still continues. It is off by another 4 rupees. So I think it was at 248, 250 yesterday, and just one day and it has reversed very sharp.
Really, and I just want to check in on some of the likes of a Shrey Infra, a Syntax, a JP Associates, which have been most actively traded and have seen some hectic buying activity in the series gone by, and this in run up to this 10K mark. Look at JP Associates, that as well is beginning to ease off, and after some solid sessions last couple of trading days, it's gone a little wobbly for sure. Biocon is reacting to its earnings. It's now down a good 4% as we speak. Let's revisit the big winners from yesterday, HDFC as well as Yes Bank. Yeah, they have been really the cushions for the Nifty in yesterday's trading session, and day before as well. Bharat Financial is holding out. Yes Bank is finally down. 1770 is where the stock is, but it's a little unbelievable, the ride that it's had from 1550 all the way nudging that 1800 mark. IndusInd Bank, the first rates haven't come in, but yes, Biocon is reacting negatively to its earnings. Not surprised with this one. Reliance Capital is the other one that I just want to check in on, wherein the profits have come in higher than what largely the streets were penciling in. More importantly, just shortly, there is going to be a conference call that's going to be headed by Anmol Ambani himself. So that's going to be key. Glenmark is starting off in the positive. Relcap holding up by about 0.5%. ITC, wherein the sales have managed to beat estimates. Cigarette revenue has jumped. ITC starts off in the green by about 1.5%. ONGC has had some disastrous earnings. The profits are at the lowest in about a year, as gas and rupee have weighed heavy on ONGC's performance this quarter. 1.25% lower for this one. Talking about negative earnings, Idea as well. It's a wider than expected loss that they've posted, even as the sales have managed to top estimates. Idea is down heavily by about 3.5% as we speak. Some of the other names which are going to be in focus, and We just showed you Deccan Gold Mine. Vedanta is looking to acquire Deccan Gold Mine. At least that is what reports seem to be indicating. What a tizzy the stock has gotten into. 49.60 for Deccan Gold, 13% higher for Deccan Gold Mine, and still counting up as we speak right now. This, of course, you read first in the Economic Times this morning. What else is holding out in trade? ICICI Bank provisions in bad loans have risen for ICICI Bank this quarter. That also is reacting to its numbers. ICICI, not Navbharat, I'll come to that in just a bit, but ICICI Bank first. And IDFC as well should be reacting to its earnings. ICICI Bank has taken definitely a whack. It's down about 1.25%. IDFC is up by about 1.5%. Glenmark reacting to its numbers. You've got Biocon, which has come out with its numbers. And then, of course, Cipla, within the FDA, has approved a generic version of one of their drugs. So look out for that as well. Cipla should come up for you on your screens next. Biocon is taking quite a sharp knock. Cipla, though, is little marginally in the green, or rather red, I beg your pardon, as we speak. For the Nifty, it's up 10K, 99.72, much in line with the rest of the globe. But CK, have to come to you first for your observations. Nothing alarming, just in line with the rest of the globe. That's exactly what the S6 Nifty was indicating, at least so far.
Yeah, I think, when we sort of got up today morning and checked our WhatsApp messages and suddenly found that SGX was trading almost 80-90 points below, I think that would have certainly run a bit of a scare through most people, because I do believe that most traders went home with some sort of long position or the other, whether they made it a bit lighter or not, but still everybody had long positions. So I think people spent a little bit of nervous time just before the open, but I think the open happening the way it did has allayed much of those fears, and the Nifty is back about 10,000. So I think we are back to business as usual, and we will follow the trend set by individual stock moves. I think, like I mentioned in my morning comments, the feed to the banking space is more or less over, because private sector banks are more or less done and over with. So until State Bank really comes in with numbers, we do not have anything big going for the banks, and that could be a bit of a downer for the Nifty, since it will not get a helping hand from the banks. That said, individual stocks are following predictable paths. Wherever results are good, the stock prices are up, and wherever results are not so good, stock prices are a bit soft. The softness seems to be somewhat more marked compared to the gainers today, so I think that indicates a little bit of slightly negative mindset at the start of the day, perhaps as a spillover from SGX. I think we'll go this way for about an hour and wait for markets to settle down. Any intraday dip back to near 99.50 levels, as we all discussed in the morning, would present us with a buying opportunity. No rush to buy, no rush to enter into trades. Let the trade come to you is what I would say.
Okay, the breadth is bad today. Let's not lose sight of that. And some of these so-called high beta or high liquid names are really turning around. Suzlon 3% off. JP Associates 1% off. JP Power, for some bizarre reason, JP Power, just because JP Associates went up, JP Power also went up. JP Power has reversed completely, 6% off. GMR 0.5% down. GVK seems to be reversing. GTL Infra 4% down. Okay, what's going on, guys? The point which I've been making, I think we've been making as a channel on a daily basis. Don't get trapped, don't get carried away. If you're buying some of these stocks, remember to define your risk appetite, because when the stocks will reverse, trust me, it'll be hard for you to exit. But for the moment, it's not like a powerful 10% sell-off, I have to admit that. And but directionally, they're struggling. So for me, another takeaway apart from the fact that Nifty is weak is the fact that the market breadth is not looking strong, and there are big holes in some of these big high beta pockets, so to speak. ITC is at 291, so that's the only green which I can spot on my screen. And Lanco Infratech, 1 rupee stock, 31 million shares. Somebody's bought 3 crore shares, or 3 crore shares have exchanged hand for a company which is, I can officially say, is a bankrupt company. 1.2 rupees, but defeats the logic that why would anybody buy Lanco Infratech. Let's look at Shriram Group of companies. Rohan, my producer, just prompted that Shriram City Union, which is going to be eventually merged with IDFC Bank, that is up 15-16 rupees. Let's look at Shriram Transport. No, nothing's happening there. But Bharat Financial is where all the speculation or all the market whispers have started again. First it was IndusInd Bank, now we hear it could be RBL. We've not heard anything from the management of RBL and Bharat Financials, but there's no smoke without fire. I mean, the stocks don't go up or down without any reason, suddenly and out of the blue. Rajan, let me get closing comments from you. I know we've extended our appointment with you. You talked about Tata Power and Tata Global Beverages. Now, they both are very different ends of the spectrum. One is a play of economy, second is a play on consumption. Which one would you like to choose if you have to choose, let's say, one?
Out of which stock? I mean, I didn't get you.
You mentioned two stocks, Tata Power and Tata Global, right? So if you have to choose, let's say, between those two,
yeah,
which one would you choose?
Well, I think both of them have decent upside, so why should I choose one? I think both of them has the potential to give 50% upside over the next 1 year, and I'm pretty confident that it will happen because they're grossly undervalued, and I think developments are going to take place in both these companies. Tata Global could end up selling Tata Chemicals, which it has got of 700 crores. Probably that money could be used towards expansion of Starbucks. And Tata Power, we are having huge investment portfolio over there, so that is surely going to happen because that will bring down the debt and substantially re-rate the market cap, so I would certainly put in money in, and I do have exposure. I personally own Tata Global and Tata Power, both the stocks, plus HT Media as well.
Okay, Rajan, great speaking with you. Thank you much for taking the time out and speaking with us today. That's the view coming in from Rajen Shah. Glenmark, that's your big winner today. The stock is holding up 3.25%. JP Associates continues to hold out. You've got Dish TV, which is holding up by about almost